Well, ENIL reported a weak set of numbers in the second quarter of financial year 2020, impacted by the slowdown in the economy. To give us more details on the quarter gone by and on the outlook, joining us now on the show is Prashant Pandey, the MD and CEO, and N. Subramaniam, the Group CFO. So, sir, to start off with, the core radio business performance was very weak, but some of this was offset by the strong growth seen in the non-radio businesses. So, if you could give us further details on the factor that impacted these two businesses in the second quarter of financial year 2020?
Well, you're very right. The radio business actually suffered a pretty big setback, and the revenues were down by 17 crores during the quarter. Now, that's not very difficult to understand given the economic environment, and every single media company has reported a very weak set of results, whether it's in television, in print, or other radio companies. But the beauty about the ENIL strategy has been for some time now that it has a very strong, what we call solutions business, where we actually provide solutions to client and not sell just plain vanilla FCT. And that business has actually grown by upwards of 30%, which has provided the cushion that it has to the results. Now, let me just explain this in a little bit of detail. As you know, radio is a high operating leverage business, which means that if my revenue in radio fell by 17 crores, then my EBITDA should have actually fallen by 15 crores or thereabouts, right? Because everything just goes through to the EBITDA. But because of the growth in the non-radio business or the solutions business, my actually EBITDA has only fallen by 8.5 crores. So that's a really, I would call it a performance which needs to be seen in this context. And one other thing I want to say, that of the 17 crores radio that revenues that dropped, 8 crores has come from the government of India, which has virtually stopped spending on any medium at all so far after it's taken over. The common belief is that the government will start spending, and when that happens, then ENIL's revenues and EBITDA and PAT growth should actually all climb back.
Okay. Also, if you explain how the implementation of Ind AS has impacted your financials in this quarter?
Yeah, so it has had a negative impact on PAT. So before I move to Ind AS, I want to explain a couple of things. While the overall numbers, reported numbers are a little weak, beneath those numbers, there are several positives which I would like to highlight. One is that, our market share has improved in this difficult year. While it's very difficult to forecast what the demand is going to be going forward, we are very focused on improving our market share. Secondly, if you look at our growing solutions business, our margins have improved by 12%, out of which 7% is the core improvement in margin and 5% is the little volatile element. The third thing is that our operating costs have come down. Our operating costs, we've seen increases in our operating cost over the last 4 quarters. In the current quarter, it has come down, not by a very significant percentage, but something worth mentioning, it's come down by close to 2%. Finally, we had the impact of Ind AS as well, right? So in the current quarter, our PAT was down by about 2.65 crores on account of Ind AS. PBT was down by 2.65 crores. And also, what I also need to highlight is that the new tax regime will also reduce our tax rates going forward, right? And also we have a sizable accumulated deferred tax liability. So there will also be a tax write back on that. We've given a note on that in the current accounts, and going forward, before March, we will take a call and that will also result in a write back. So there are a few positives that we would like to highlight, and I'm sure when the rebound in the economy happens and media spends improve, the cost structure, the new cost structure that we will have will also improve our overall margins.
Okay. On the international concert business, by when are you expecting profitability on that business?
Well, see, we have a big operation in the US, which we only launched on January 26th this year. We have said in the past that it will take us between 4 and 6 quarters to break even in the US, and we are pretty much on track on that. I'm happy to say that we've been reporting more than $100,000 in revenues in just the market of New Jersey in the last 2 consecutive months. So that shows that the brand is being accepted and the revenues are doing well. When it comes to the UAE, we are in the midst of signing up a new agreement, and soon as that happens, we expect again that operation should deliver profits from the very first year. Okay. And likewise, we are going to be entering Qatar very soon, and we expect a very quick break-even and generation of profits in the very first year over there as well.
Okay. So maximum 4 to 6 quarters are expecting profitability from this international concert business?
In the US, but at an aggregate level, I would expect that would be faster than that.
Okay, at an aggregate faster. So now if you see, this is the focus that you're doing on the international market or on the concert business, but on the radio business also you have you're increasing your presence on the international market. If you could give us some light on the recent tie-ups that you have done, and also how will this benefit going forward the company?
Well, the radio business has just gone through a major expansion, as you're aware, right? Batch 2 auctions happened just 3 years back, and we've just completed the rollouts of these stations about 6 to 9 months back. The government is planning another round of auctions to happen, and they've asked for our suggestions on various factors over there. But in all honesty, I don't think that any more rounds of auctions are going to be successful at all. The government has a very, very tough job to do in terms of relooking at the whole policy itself. The policy is flawed, the reserve prices are flawed, and therefore we believe that there is no more scope for expansion in the radio business. And as far as ENIL is concerned, we are happy with the network that we have at this point in time, and we are not looking at expanding, maybe except for a couple of markets here and there.
Okay. If you could give us some details on if there have been any price hikes or cuts in the radio industry, and what is the competitive scenario, and by what percentage the price hikes or cut, if there has been any currently that we have seen.
Prashant, you want to please?
So the radio industry and the overall media industry has been buffeted by headwinds. And as a result of that, what happens is typically in electronic businesses, electronic media businesses, volumes take a hit, but also pricing takes a hit. And we've seen that happen in the radio industry. It is our belief that across the sector, radio pricing has fallen. In the case of ENIL, however, it has, because it's a leader brand, it has fallen by a much more smaller 4 or 5% compared to a year ago number. But we believe that in other radio stations, the fall may have been between 5 and 15%.
Okay, and on the competitive intensity?
The competitive intensity is exactly where it has been for some time now. There has been no change in it. But remember always that in a weak economic environment, the strongest players become stronger. And that is what Subbu said when he said that our market share has actually improved by 1%, is a reflection of that.
Lastly, sir, how are you differentiating your offering compared to other radio stations, as service provided are more or less the same by all the radio stations in India?
Well, you're totally wrong on that subject. The services provided by radio stations are not at all the same. They're all very different. All that you look at is that many stations play the same type of music, but music is only a small part of a radio operation. Less than 30 minutes an hour is music. There's a lot of other elements that go into it which actually give every radio brand a distinct character. But when I talk about ENIL, and I want to put this yet again in the right perspective, that for ENIL, radio is one business, and it's a big business today. It is about 2/3 of our revenues, but remember, it's only 2/3 of our revenue. We have a very strong 1/3 which is not radio. We are a very strong video company. I do not know how many of your viewers know this, but we made more than 30,000 videos last year. When we go and meet clients, we are not selling them radio. We are selling them a solution which includes videos, which includes digital assets, which includes our influencers and all of that. So we see ourselves very different from the other radio companies.
Okay. Well, that would be all, sir. Thank you for speaking to BloombergQuint.
Thank you.
Thank you.